probably surprised a lot of people that despite the price rise, the Chinese are continuing to buy. So are other central banks. So what's all this about? Well, the answer is quite simple. And that is, it's not gold going up, it's paper currencies going down. And this is very, very important. It's very important to get this message early because when the general public finally realizes that it's not the price of eggs or the price of coffee or whatever going up, but actually the purchasing power of their currency going down, then the currency is doomed. And when the general public wakes up to it, I can tell you, the dollar, sterling, euro, yen will all be a lot lower. Now, I put it that way rather than saying gold is going to be a lot higher, because if you think as an investor, you look at gold and you think gold's gone up. As we talk, I don't know what it'll be when this is released, but as we talk, it's had a good day. I see it's up $18. It's currently trading at 2,712, challenging the levels we saw, 4 weeks ago. If it breaks that, then it's going to go and hit new highs and so on. But do we really want to pay this much for gold? Perhaps we should hang on and wait for a decent shakeout. It's gone too far. But the point they miss is it's not gold going up. It's the currencies going down. Now, obviously, nothing goes down in a straight line or in an even tempo. But I think if you understand that, then you understand that really what your strategy should be is not trading it, but actually accumulating it and accumulating the physical, not paper. Now, this is a very, very important point. And of course, the whole of the investment industry has a difficulty here because gold is not a regulated investment. So how do you get it past your compliance officer? Well, the answer is you go out and buy ETFs. But your problem with the ETF is you don't own the gold. And worse than that, not only do you not own the gold, you don't actually own the shares in the ETFs unless you have specifically decided to take delivery of certificates. Now, this is a very important point because the owner of, the owner of the certificates, in effect, is, the clearinghouse, the intermediary, the big boys in the middle, basically, who guarantee settlement, Euroclear, whatever. And why have they got it? Well, the answer is quite simple. You've got a huge, great derivative mountain, which is absolutely enormous. And the fear is that at some stage we get a crisis and that could be jeopardized. So what they want is your stock to have as collateral to deliver in order to ensure that whole mountain of deliveries of derivatives doesn't collapse. So, ETFs don't get you out of it. The answer basically, I'm afraid, is you've got to accumulate coin and bars, both gold and silver. Silver I regard as gold on steroids because, the gold-silver ratio is just crazy. At 85 or something as we speak. This is nonsensical. I don't see it going back down to the sort of 15, 16, if you like, when when silver was treated or valued as money. I don't think we're going to get there. But these levels on the ratio are just absolutely crazy. And as gold goes up, silver will go up twice as fast to bring that ratio down to something which is, if you like, more sensible. So I think, 2024 was interesting. 2025 is going to get even more interesting, I think. I would see these currencies, the fiat currencies, going down in 2025, at least as much as they've gone down in terms of their purchasing power, measured against real money, which is gold. And there are other problems in the background. And I think one thing that could really drive this very, very hard is the debt mountains that governments have. I think the psychology of it in the West, we are so far behind. We really are. And if you look at the mining sector too, there are mines which are so incredibly cheap. If you have half an understanding of the potential for the relationship between fiat currencies and gold, and of course the institutions will switch quite rapidly out of the sort of tech stocks and all the rest of it when that bubble goes, and there'll be walking into trying to find mines. And, how many analysts do they have now? I mean, there are very few actually, good analysts. I mean, brokers haven't invested in analyzing and covering the mining sector. It's a dirty business and all the rest of it. And anyway, it's been dead for Christ knows how long. Why chuck good money after bad has been the approach. I can see that there's going to be some very, very big shifts, if you like, in the entire investment scene in 2025. It's very interesting times, I think, very interesting. I mean, interesting in the sense that, we'll be watching. It's rather like a public execution. You'd be watching people dangling on an end of a rope, sort of speculating how long they're going to be twitching. Sort of thinking, hold on, this could happen to me. There's a sort of that sort of feeling, watching these developments. For those of us who have, if you like, an understanding of the relationship between money and credit, this is actually a very, very serious junction.
As we approach 2025, the financial landscape continues to shift dramatically. Gold and silver, often dismissed as relics of the past, are asserting themselves as vital assets for preserving wealth and navigating the challenges of an increasingly unstable global economy. Let's explore the forces shaping this narrative and how investors can position themselves for the future. One of the most significant drivers for gold and silver prices in the coming years will be the continued decline of fiat currencies. For decades, governments have relied on money printing to finance deficits and prop up economies. This strategy, while politically expedient, has eroded the purchasing power of currencies like the dollar, euro, yen, and pound sterling. In 2024, we witnessed another wave of inflation that outpaced wage growth, pushing more people into financial distress. Alasdair Macleod predicts that 2025 will exacerbate this trend. As inflation becomes harder to control, central banks will face mounting pressure to cut interest rates, even as this further devalues their currencies. The psychological tipping point for the public will be realizing that it's not the price of goods rising, it's their money losing value. When this understanding becomes widespread, the collapse of confidence in fiat currencies will be swift and irreversible. Western governments are trapped in a debt spiral. In the United States, federal debt has exceeded $36 trillion, and interest payments are consuming a growing share of the budget. Other G7 nations face similar challenges, with debt-to-GDP ratios reaching unsustainable levels. This debt burden creates a vicious cycle. Rising interest rates increase the cost of servicing debt, forcing governments to borrow even more. The only way out is through inflation, devaluing the currency to make debt cheaper in nominal terms. However, this strategy further erodes purchasing power, driving more people toward gold and silver as safe haven assets. In 2025, this dynamic will likely reach a breaking point. With central banks printing money at unprecedented levels, the stage is set for a currency crisis that could rival or exceed the scale of previous financial collapses. One of the most intriguing developments in recent years has been the aggressive accumulation of gold by central banks, particularly in Asia and the Middle East. Countries like China, India, and Russia have been quietly stockpiling gold to diversify their reserves and reduce reliance on the US dollar. This trend is expected to continue in 2025, as geopolitical tensions and economic uncertainties drive nations to seek financial independence. Central banks recognize that gold is not just a hedge against inflation, but also a strategic asset that can provide stability in a volatile world. For example, China's ongoing efforts to buy gold, despite official claims of a temporary pause, reflect a long-term strategy to insulate itself from potential economic and political shocks. Similarly, Russia's de-dollarization campaign has been accompanied by significant gold purchases, highlighting the metal's role as a cornerstone of financial sovereignty. While gold often steals the spotlight, silver offers perhaps an even more compelling investment case. The gold-to-silver ratio, which currently stands around 85-1, is historically high. This suggests that silver is significantly undervalued relative to gold. Silver's dual role as a monetary and industrial metal adds to its appeal. In addition to its use in coins and bullion, silver is a critical component in technologies such as solar panels, electronics, and medical equipment. As the global push for renewable energy accelerates, demand for silver is expected to soar. Investors who recognize silver's potential now have a unique opportunity to capitalize on its upside. Historically, when gold prices rise, silver tends to outperform, often delivering gains twice as large. This makes silver an attractive option for those looking to maximize returns in a precious metals bull market. Another area poised for growth in 2025 is the mining sector. Precious metals mining companies have been largely overlooked by institutional investors, creating a valuation gap that savvy investors can exploit. As demand for gold and silver rises, mining stocks are likely to see substantial appreciation. However, the lack of experienced analysts covering the mining sector means that many institutions will struggle to identify quality assets. This creates an opportunity for individual investors to get ahead of the curve. By focusing on companies with strong fundamentals, low production costs, and significant reserves, investors can position themselves for outsized gains as the market catches up. Geopolitical tensions are another factor driving the appeal of gold and silver. From conflicts in Ukraine to trade wars between the U.S. and China, the world is becoming increasingly unstable. These uncertainties amplify the need for safe haven assets. For instance, the weaponization of the U.S. dollar through sanctions and trade restrictions has alienated many countries, prompting them to seek alternatives. Gold and silver offer a way to bypass the dollar-dominated financial system, providing nations with a level of economic autonomy. Moreover, as global alliances shift and new economic blocs, like BRICS, gain prominence, the role of gold and silver in international trade is likely to grow. These metals are not just commodities. They are tools for reshaping the global financial order. While institutional investors and central banks have been increasing their exposure to gold and silver, retail participation has remained relatively muted. This is expected to change in 2025 as inflation and economic instability become more apparent to everyday savers. When retail investors enter the market, they often do so in a frenzy, driving prices higher at an accelerated pace. The combination of retail demand and continued institutional buying will create a feedback loop that propels gold and silver to new heights. Accumulate physical metals. Focus on buying gold and silver coins or bars. Avoid paper substitutes like ETFs, which carry counterparty risk. Diversify into silver. Given its current undervaluation, silver offers significant upside potential. Consider adding it to your portfolio alongside gold. Explore mining stocks. Identify undervalued mining companies with strong fundamentals and low production costs. These stocks are poised to benefit from rising precious metals prices. Adopt a long-term view. Precious metals are not about short-term gains, but about preserving wealth over decades. Stay patient and avoid the temptation to trade based on daily price movements. A broader perspective on wealth preservation. As Alasdair Macleod points out, the ultimate goal of investing in gold and silver is not to generate speculative profits, but to preserve purchasing power. In a world where fiat currencies are losing value at an alarming rate, these metals provide a tangible store of wealth that cannot be debased by government policies. This broader perspective is particularly important as we face an era of unprecedented economic and political challenges. By focusing on wealth preservation rather than short-term gains, investors can navigate these uncertainties with confidence. The global financial system is at a turning point. The cracks in the foundation of fiat currencies are becoming too large to ignore, and the role of gold and silver as safe haven assets is more relevant than ever. For investors, this is a time to act decisively. The opportunities in gold, silver, and the mining sector are abundant, but they require a clear understanding of the forces at play. By positioning yourself now, you can not only protect your wealth, but also participate in one of the most significant financial shifts of our time. As 2025 approaches, the importance of gold and silver will only grow. These are not just assets, they are lifelines in a world of uncertainty. Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a